Afternoon. Thank you so much for your time. Long time coming on
Thank
the
you very
show.
much, Ajay. Nice to
Nice
be
to
here.
see
I'm
you.
sorry I was a bit late.
No,
Thank
no,
you for
I
the
understand technology. Let's start with technology then. Do you think technology space has bottomed out or not
yeah.
yet?
I've been very constructive on software for a while now, and the underlying hypothesis is the fact that we generally believe that inflation was always a supply side problem, and we've been very surprised with the resilience of the U.S. economy. So you come down, the CPI inflation is down from 9.5% to 4%, and the unemployment rate in US is at about 3.4%, which is a 5-6 decade low. That's simply amazing. I suspect that as you move into the next quarters, so software to us, Ajay, is a macro trade. Uh, I think even the CEOs are not going to get it right. I think you'll start seeing earnings upgrade happening sometime in the third and the fourth quarter of the season, simply because US is doing so well.
Very simple point, Nirav. US is doing not as bad, but actually well, better than what the street is estimating, and no point exiting or taking a negative call on the software space from current levels. What about pharma? Is it too late to latch on to pharma, or it is right even at this juncture? And what are your top picks if you could share as a house?
So for pharma, we believe that we're more of a market performer, and it's very difficult to categorize pharma because there are a lot of bottom-up stories over there. Uh, but the thing is that when you want to take a call on India for the next 2, 3, 5 years, this is largely the story around domestic consumption. This is largely a story around manufacturing renaissance, if you want to call it that, and investment cycle, right? So why do you even want to get around, consumer staples and pharma and stuff like that? There are far more exciting stories out there.
Okay, fair point. In fact, that has been the flavor in the last 8, 10 months. But my only point is, sure, you can tell us about how do you play the domestic story by manufacturing autos or any other, but also give us a view on valuations. These stocks have run up quite a lot. Siemens, ABB, Variety are 70, 80, 90 times forward. So is it not a little too late to get in there? Maybe you should look at these names on any kind of a pullback.
Yeah, so I take your point, and when I talk about the fact that we are excited about the macro story that plays out in investment cycle and manufacturing and stuff like that, that is a very 30,000 feet view, and then you obviously get into company details, and then you get into earnings and valuations and stuff like that. I am with you on the very stretch valuations for some of the MNCs that you mentioned, but they also have virtual monopoly. So there are very few companies that cater to process technology in manufacturing, right? The names that you talked about. Or when you talk about renewables, and renewables is not an India story, it's a global story. So there you got Siemens. Right now, they're not doing well with Gamesa and all. So yeah, you want to look at pullbacks in these stocks, uh, but there are enough ideas as you go down the market cap ladder.
Very good. What are your thoughts on mid cap, small cap basket, Nirav? The way they have run up quite a lot. Is it prudent to take some money off the table? Uh, or do you think it is right to stay invested?
See, you know, my view always has been the fact that you are coming out of after 13, 14 months of consolidation, right? And obviously, when the stock markets are making new highs, uh, there is an X level of euphoria around some specific stocks and stuff like that. Uh, but that doesn't mean there are not enough ideas around. So I am not a great believer that you want to take money out of the table. I genuinely believe that you can only try and hopefully time when valuations are at extreme levels. What I mean by that is that uh, sometimes valuations in an overbought situation is very apparent. So if you're trading at 100 Ps, 90 Ps, or if the valuations are trading at 510 Ps, that is apparent that is undervalued. It's apparent that there is going to be a permanent loss of capital if you're buying something at very exorbitant valuations. In between, markets are efficient, right? There's no reason for you to believe that you're very smart and you're going to sell something at 25p and buy it back at 20p. Markets and stocks don't move in a linear fashion, right? And there are numerous studies, about it, that, earnings can come down at 20% and suddenly stocks go by 40% in one particular month after not doing anything for a month, for a year or something like that. What I can say, and we meet a lot of companies, right? So all I know that, whether you look at railways, whether you look at, this PLI-led manufacturing companies, uh, there are a lot of ideas around, right? And in some of the cases, valuations are ahead of the story. In some of the cases, the stories are ahead of the valuations. Uh, but there are investable ideas from the medium and long term perspective, and numerous investment ideas is what I would leave it at.
One last point, Nirav. Do you see a case for a 2-3 year plus sitting here, looking at the commentary and the way earnings is panning out and everything, reforms, etc. 2, 3, 4 years of structural kind of a case for Indian equities?
I will put the odds very, very high at that. And the reason is that we don't understand, but now probably let's try and connect the dots. When you look at the last 8, 9 years, you look at how we have tamed inflation, right? And I was myself very critical about that. We are too slow to react to the pandemic stress, and maybe the government could have done better. And what a job we have done, right? So, how many times in your history have you seen US inflation and Europe inflation doing far worse than what India has been facing, right? Look at my current account deficits, right? You are getting a situation now where in next 1 or 2 years, it is quite likely that probably you could be neutralish on current account, right? Now that has massive implications in terms of my outlook on currency and currency outlook further on inflation. We had a vicious circle, right? Rupee depreciates, more inflation, rupee depreciates. We can get out of that. We are getting the investment cycle right after a long, long time, right? And it seems to be continuing. So I think after a long time, I'm seeing that your macros and your micros are falling in place. Uh, yeah, so I would assume that India could be a breakout emerging market for the next decade.
Standing. All right, Nirav, we'll let you go on that one. Thanks so much for your time. That
Thank
was
you.
Nirav Sheth saying that it would be a breakout market. India would be a breakout market this decade.